Today I'm going to walk through some of the critical elements involved in the sqope platform. Before I do that, I want to talk for just a minute about some of the things that have been driving our development with sqope, some of the things that have come up with our market research, and some of the significant user experience interviewing and testing that we've done. Some of the key drivers that are coming from the self-directed investor that have sort of shaped our development include a desire for transparency or deeper transparency into really what's happening within their portfolio, desire for social investing, particularly for the younger next generation self-directed investor, a need for aggregation or aggregating held away assets, to have all of their assets at one place displayed in front of them and to run performance against those assets. So some of these things are issues that we've been paying close attention to as we've been developing sqope, and have sort of shaped our direction as far as that's concerned. There are essentially 7 different views within sqope, a large body of functionality within the product. Today I'm really going to focus on, I think, 3 different core elements that are really central to how sqope functions. Those would include risk management, our people like UPage, which is essentially our crowdsourced data social analytics function, as well as the performance calculation itself. Starting with the risk view, and this risk is a critical piece that we've involved with performance that really allows the self-directed investor to have an opportunity to understand the risk in their portfolio and essentially the reward that they're receiving in return for this risk. The risk view is essentially a what-if scenario screen that allows the investor to set their risk tolerance. Up in the left-hand corner you can see the different types of risk. The circle in orange is essentially the investor's target or the risk tolerance that they're comfortable with. They're essentially able to work within this screen, move the sliders down below the buy and sell sliders underneath, adjust your positions to modify and play around with the positions within their portfolio. This gives them an opportunity to adjust their positions and take a look at bringing their current position, their current portfolio, which is essentially indicated with the green circle, which is where they are now, and bring that a little bit closer to their risk target. There's also the social component that I've mentioned, which is the people like you piece, which is the gray circle. The gray circle essentially represents where people like this investor or like-minded investors are falling within the risk spectrum on average, and gives this investor an understanding of how other people that have similar goals may be structured from a risk perspective. Once they've had an opportunity to manipulate their portfolio, they can understand where they fit after they've made their adjustments based on the blue circle, which represents their position after these trades. So this allows them an opportunity really to manipulate their current positions from a risk perspective. They can add in new positions as desired here as well, or previously closed positions, essentially creating a what-if scenario to adjust their risk a little bit closer to their target. And one of the key goals of the sqope product that we've kept in mind along the way is really to make these results and the analytics that are coming out of sqope actionable, and that's a critical piece of the what-if tool here as well, where once they've done their rebalancing, they can actually generate an order, a trade order, directly from this screen as well, which is something that our brokerage clients would find to be of benefit with sqope too. The people like you page is sqope's social analytics. I've mentioned some of the feedback and one of the drivers specific to the next gen of self-directed investors and the social investing that they're concerned with is available within sqope, and essentially this allows the investor an opportunity to really benchmark themselves, more than just benchmarking against a standard benchmark like the S&P 500, for example. They're able to benchmark themselves against people that are investors that are similar within the same broker. They can essentially select different criteria up in the left-hand corner of the screen, utilizing age and income, for example, favorite sectors, trade frequency, to define who they are. Once they've defined who they are as an investor, sqope will then bring in information from the crowd with people that are similar investors, and present that information with anonymous user data. You can see over on the right-hand side of the screen, different users are brought into the system and presented to this investor, and they're able to understand the risk profile, the return of a particular investor. For example, this investor, the first anonymous user, has a 0.5% higher risk than the current investor, but is receiving a 25% higher return. So this gives the investor an opportunity to really get some additional insight into what's going on with similar investors. They can take a peek directly inside of the portfolio of these users and actually take a look at the holdings that these users have available to them. Down below, we also have investments owned by people like you, and this is an aggregate essentially of the top investments that are held by the investors within this crowd. Microsoft, for example, is on top of that list with a 15% popularity. We're also including the average return for this crowd for that investment, for that security, and the risk profile for that security as well. Up in the upper right-hand corner, we're also positioning this group against the entire brokerage universe. So in this case, this group of particular users is in the top 20% of performers across the board, as compared to the entire brokerage. So this really gives, again, an opportunity to run some analytics against the crowd and to potentially give the investors some more trading ideas and potentially trigger some additional trading activity. And ultimately, at the core of Scope is portfolio performance. This is the portfolio return screen. There's a great amount of functionality and some unique features within Scope that really haven't been done before. After-tax returns is a great example of this, where with the automation of cost basis, we're actually able to pull gain-loss information into the return calculation to give the investor an understanding of how they're performing both pre and after tax, and whether or not their tax lot trading decisions are appropriate, helping them or hurting them from an IRS perspective. We also have risk information and information from people like you. The last two views that I described, information is kind of pulling over and overlapping into the return screen and creating useful information for the investor that they can take action upon. Risk-adjusted returns, for example, gives the investor an opportunity to understand how they're performing, not just from a return against their benchmark perspective, but also how they're doing for the risk they're taking. So in two investors, for example, with similar returns, essentially the investor that has taken less risk for the same return would essentially score higher in this case from a performance perspective. Again, unique to Scope, Scope is able to run account level performance, aggregate account level performance, and again, I had mentioned earlier that aggregation is a huge driver in the market right now, and Scope is built with the ability to bring in held away assets and to run performance against multiple accounts within one brokerage, but also held away assets at different brokerages as well. And also at the security level. And Scope can run performance not just at one security, but also for a collection of securities, or potentially for a strategy. Take a covered call, for example. The investor may want to understand and connect that call to the underlying equity to understand how that combined strategy performed together, as opposed to looking at them essentially as separate investments. So a tremendous amount of flexibility to be able to run returns here for any given account combination or combination of securities and strategies, as well as any different time frame. There are certain set time frames, but also custom time frames can be run to customize the time frame from any perspective. We're also pulling in different insight markers. Attribution is a feature that is typically restricted to professional money managers, and it's really a calculation that essentially allows the investor to understand not just what their performance figure is, but what's going on behind the scenes that may have allowed them to underperform or outperform their benchmark. This is a calculation that is useful really to provide additional insight into why the performance may not have been so good, or why it was very good. and potentially to give the investor an understanding and some ideas on how they might improve their performance. So that attribution, in combination with the risk statistics, people like you, Scope runs analytics on top of all of these different features, all of this different data, to be able to provide insights to the investors. You can see down the bottom of the page different icons, green star icon, yellow and blue icons that essentially call attention to different sectors, different securities, and different trading insights that the investor has access to that might give them opportunities to drive additional trading activity.